Hey everybody, Joshua Phillips here, Churchill Mortgage. It is January the 16th. I'm actually going to be working remotely tomorrow, so I thought I'd go ahead and make a video today. And I'm excited to make a video because we actually have a little bit of good news. Now, if you're familiar with the information I typically put out, you're going to see here we have had some green candlesticks on our mortgage-backed security charts, and that's the U shape we've been waiting for. Now, before I get a little more into the charts, why exactly is that happening? Well, this week we had two important economic reports. We had what's called the PPI, Producer Price Index, and we had the CPI, Consumer Price Index. And these are reports, economic reports, that primarily were looking at inflation. You guys know, if you've been following my videos for a long time, we want to see cooling inflation, not heating up inflation, which has recently been the trend. So I pulled up this on CBSE, just some headlines. I put in CPI in a search. Here's some headlines. Muted CPI gives the markets best day since November. Markets celebrate cool CPI. That's what we want. We want a cooling report. It offers a Goldilocks scenario. And then right down here, mortgage rates head lower after CPI report. So, hey, this is what we've been waiting for. Whoop, whoop. So, exciting news to finally see some good news. I feel like I haven't brought some good news in a number of weeks. So let's jump over here to the charts. Now, again, if you've been following this for a while, this is mortgage-backed security charts. Mortgage-backed securities are where mortgage rates derive their value. And, it really gives an accurate picture of what's going on in the market and with mortgage rates. As I've often said, this screen right here, every mortgage professional in America has this screen up, and we are all watching it constantly, pretty much. For the time I wake up to the market closes, I'm keeping an eye on this. Now, what do you need to know if you're looking at these Japanese candlesticks? Well, all you need to really know is that red is bad, green is good, and the higher the security price is, the better mortgage rates are doing. And of course, the lower the security price is, the worse mortgage rates are doing. Now, we got here this nice reversal, these green candlesticks, this bounce back up that pulled us out of the pit we were in up until a couple days ago, this downtrend. So that is great news. However, I do have to say, before we get too psyched up about mortgage rates, let's take a look here. Let's pull it back to that year chart, which we often come back to. So yes, we got the green bounce, but we are still substantially off where we were last September, when mortgage rates kind of got into the low sixes, or even back in December when rates were better. We're better than we were, but we've still got a long ways to go with security prices before we're back at some really great it's all perspective, great interest rates in terms of, compared to the last couple of years. So, hey, we've pulled off the bottom and we are improving. Let's come back here to the 90-day chart. Now, I've mentioned this before. This is just some technical information, but what we are looking at right now is the moving averages. That is the average price for the last 25, 50, 100, 200 days. When we are under those moving averages, it is called a ceiling of resistance. And that's kind of what we're up against right now. The headwinds we're up against to see mortgage rates and mortgage-backed security prices improve further. Right now on the 25-day moving average, like today, we closed perfectly right on that 25-day moving average. Now, what we want to see, fingers crossed, over the next few days is breaking through that level. And then I think the next level is I believe it's the 50-day moving average, and then the 200, and then the 100-day moving average. We want to break back above these levels to see the momentum continue, to see mortgage rates continue to improve. So, hey, great news. We'll take the win. We'll take the little U shape, kind of bouncing out of the worst levels. Maybe the PPI and the CPI report are a good indication that inflation is still coming down. We're getting closer to that 2% target. And if that continues to be the case, we will see mortgage rates improve. So, hey, one last thing before we go. I wanted to mention our YouTube channel. There's a picture of Amy and I. We have a YouTube channel. A lot of times that's where you're finding our videos, and of course that's where I point you to for our videos. But Mortgage Magic with Josh and Ames, we try to have a little bit of fun And we've been putting out videos for about the last 18 months consistently with mortgage information. Amy's here talking about home equity lines of credit, understanding what a 2-1 buy down is, preparing to sell your home in 2025. So there's a lot of things that we're talking about, it being a buyer's market. So feel free to peruse that. I think it's a great resource. Of course, additionally, if you're getting an email from me, it includes a link for an application. So feel free, if you're ready, to fill out an application. And as always, feel free to call Amy or I if you want to go ahead and just have a conversation about purchasing a home in your situation and specific interest rates for you. We're happy to do so. Again, for Joshua and Amy Phillips with Churchill Mortgage, hope you have a great day. Bye.